All right. Hey, Dave Knight here, 123daytrade.com. We are, what about 15 minutes outside? That's where we are. 12 minutes outside the release of the inventory report. So, be back in a couple minutes. All right, so there's a battle going on. Here's our red bars through here between 245 and 315. This is the Asian Open. Then you see the European Open right around here into here. And then we see the 8 o'clock open of the crude oil market with 1,000 volume bar. And then recently here we see the offsetting, but still blue later in the day. So we've traded down from the open was 3,999. All right, so highest blue, highest red. This is highest blue right here. Highest red's right here. They're about equal. So we'll see what kind of volume comes up. So we had a 1,060 red bar volume. That's favoring the blue side a little bit. That's just because there's been more blue than red recently. This is 1,062. Right there at 8 a.m. So basically what it's telling me is I'm looking for a tiebreaker bar. And that's going to come on the inventory report. So these two offset each other as well. We'll use those two because this is closest to the market right now. 836. At 901. 901 we have a 648. Favors the long by 190 right now. So we should see a high volume spike, you would think, off the inventory number. Alright, so let's get our price limits up here. $4,046, that's same as yesterday. And then we have Forex Factory. I would not always defaults to that, but that's not what I want. Inventory report coming out at 9:30. Alright, so it's set up. I like to go a half R off this report to 2/3 R, not a 2R. We'll start with a 1R stop though today, and we'll stick with a 6P target, which today would be 168. That's how we'll set up for now off the inventory report coming on. We have to wait for 1 minute to pass by before we can get involved. Pivot today is, you see S1. We've already went to S1 and traded off of it. Pivots back here at 40.47. R1's at 41.18. S2, if we can run today, $39.60. Oh, excuse me, $38.60. All right. That's how it's setting up. As far as top down goes, well, we're trading down off the gap high a few days ago, or was that, just yesterday. Trying to reach down to the first Fibonacci retracement, perhaps, and we have 3,800 down here too that can be run. Interesting. Go back to the hour. It's be easier to see things. So here's our gap top. Closed the gap on closed the gap on yesterday, and now we're trading down today. There's a bunch of demand down in this area, around the 3,800 level, around S2 level, somewhere between S2. See where our 200 bar is on the hourly chart, definitely within range. Might be a nice down move today. All right, so that's our hourly chart. It's like one of those days, if I could trade early, I would get short and stay short. And I would use this as my exit point if it got above it right up here. But I'm not allowed to do that. So we're in a demand area right now, it looks like, where we're trading. Here's your 15-minute, what it looks like overall. There's your gap up there getting hit. See us coming down. We've went 1, 2, 3. It could pop up. So it could be good to stay out until see what the inventory number is today. 10-minute foundation chart that we'll continue working on here in the near future. Here's what that looks like. This is with open, high, low, close bars. I actually prefer to see them that way. See where our Williams percent R is showing down right now. All right, that's top down today. About 3 minutes outside the report. I'm going to pause here. I'll be right back with about a minute to go for the report. All right, we're about a minute outside the report. I wanted to get my spreadsheet printed. And $39.99 is the day's open. I'm going to be surprised to see us push up there on the inventory number. Red bar could be failure. Okay, so 1.4 positive, expecting 1.2. Pretty much on target right now. Right now the entry point's 37. Down to the low. Three red bars right there. Three reds. All right, so our target's going to be 3,800 if it's not close to it. That'll be the Fibonacci number that I'm looking for. Look at that, 361 at 3903. See if we can push down to the 3,800 level. Have a nice little run here. Alright, so where's S2? S2 is 3860, perhaps a bounce down there. Anomaly bar in here. You not want to get caught in front of this. You want to could easily run the 3,800 mark. Let's hope we can get it today. I want to measure from here though. Actually, I want to measure a 6p move from up here. $39.63 it looks like. That makes $38.79 a 3p move. Alright, go ahead and lock in 5. $6p move from there is $37.95, so we are going to go after $38.05. Damn it. That is the hardest trades. Not able to eat that up right there. It did. This is the break point up here. All right, so our target again is 38.05. See which way the market wants to break now. We'll hold 21 for now. We'll hold 21 against whatever this is going to give us. Really think we can run 3800 line. 3860 is where I think that might bounce. Right here at S2. Doesn't want to go. Yet. Maybe we'll get lucky here. Okay, that high spike right there was 39.18. It's all right. 39.63. 6P target's 37.95. Looking for 38.05. Still looking for the S2 line to get hit down here. $100 bar held last time, so we don't want to be below the 100 volume or the 100 bar SMA, so we'll hold 39.13 right now. 14. Got one eye on here on plus 52, by the way. I'd like to see it run down quickly down to the S2 line. Right around here is 30 ticks. So S2 looks like we'll be protecting around 39.01 against the S2 line. Momentum trying to switch over here. Just hoping we have enough oomph to get down at least S2 right now. $111 right there at 3,900. And they see it. 3860's down there. You know they see it. We'll be holding roughly at 3860 or close to it. We'll be holding 39.01. Bust this low right here. We'll start. All right, let's go ahead. Let's move to it. It's either going or it's not. There's 400 right around there. I believe we can get to this at least. So we'll be holding roughly around here. If we can hold now. We can push down to the S2 line. All right, so 3899. This is the Hare side of the trade. No such thing as a tortoise with one contract, unfortunately. And I'd have to hold it way up here, and I don't want to give up this. I don't want to give up 30 ticks of profit. It's too hard to get. You just don't get movements in your favor very often. Right around here is around 50 at 881. That's 50 ticks right there. Or 90, I forget. Well, no, wait, is it 79? Yeah, I guess it'd be 79 would be 50. Expecting the market to get down to S2 before bouncing. If we get lucky, it'll push through it without looking back. There's 50 ticks right there at 79. How close does that get us to the market right there? Little too close. All right, so 79 is 50 ticks. That's where we'll be holding when we hit the S2. If I can push a little bit lower, I'll go to 79. Now, $50 ticks is a win any day, anywhere, anyhow. I can control my losing. I'm expecting a bounce at any point now. 50 ticks is a win any day. All right, got it. There's probably still 70, 80 ticks on the market here. That pulls me out of the hole though. All right, so bottom target still is 38.05 to 37.95. Now there is a Fibonacci level right where we're trading. We ran through it. It was at 38.85. Expecting a bounce here down here at S2. Here comes the S2 bounce. That's why I'm always I always take 50 ticks when it's on the table. If I can get close enough to take it like today, I'm going to take it. As I just know how hard it is to get past that level in any given day. And it makes up for a lot of bad trading too. No, I wouldn't say bad trading. It just makes up for a lot of mistakes. It makes up for a lot of if I could do that every day, if I could make 50 ticks every day and keep the day job away. Unfortunately, the crude oil market in intersession doesn't give 50 ticks all the time. Now, maybe some other markets do, but down we go. This could be on those 100 and something tick days here. There's your S2 line. How far did that get up? Right there. Made it to 84. Guess it's going to go after the 50% retracement today. Damn. This is interesting. Look at this right here on a 333 chart. Trying to base right here. These are some of the horizontal lines I had on the charts from previous day. That's a demand area. Let's go find out when that was. That's when I put it on. Right here is where I put it on. So what day? That'd been June 17th. So we're trading back to levels that we haven't seen since June 17th right now. It's a good line to hold right there. It's another supply area right in here. There's all the volume. You can see a little bit easier on the 333 chart. Stop running today, obviously. I have to keep track of demand area on my 333 chart. Lets me know where I expect a possible bounce can be. Still think we can get down to the 3,800 level though. 400 at 38.30. That's the bottom of the demand area right there. I'll show you a different way at it right now. Just if I knew that they'd bounce at this level all the time, wow, could you trade that? There's the top of the demand area. But if I could just held on to that a little bit harder instead of getting out at 78 to hold. I expected a deeper bounce at the S2. Didn't happen. So they're definitely putting some support in right through here. Still think it pushes lower though, and then they'll put their final support in and send it. Look at this though on the 15-minute chart. So this is what you're fighting against right now. If you're trying to get long, fighting that. Last push right there. Is that it? That's all they got in it. Gets violent on the bottom. Very violent. I'm not going to pick a bottom today. Not below S2. Nope. Never take one of those rules. Don't take longs below S2. All right, so if I was still in, I guess I'll be holding the 100 line. Expect to bounce around 3,800. 50% retracement. You should see your Fibonacci traders coming in around 3,800. If I could just held. So the 100 bar line. Held the whole move so far. Good to know. Be interesting to see if it does bounce around there, somewhere close to it. The momentum's saying that it might be close to being bottomed. How much of that do I want to give up? None. Still think we got one more push down here. $3,800. That's the, there it is right there. Would have got 110. So there's some people thinking that. So they're trying to trap the Fibonacci traders in now. It's not going to bounce at 3,800. I think it pushes through and then coming back up to 3,801. Well, maybe that's as low as it goes. 3,804? I don't think so. I don't know though. Here, low to low. It's a good spot. Try right there. They want to be closer to this 04 mark though. So the 100 bar would be our exit. Couple ticks over it. Let's go with 3 over the 100 bar. Put around, say, 31 right now. See if it gets up to 31. This is how I stay out of bad trades, by the way. Pretend I'm still in it. And this is how I've got better being a short trader, by the way. And this is how I would handle my tortoise side of the trade right now. I'd probably go right in the middle of these two. On the tortoise right there, that's what I'd look at. 100 and the 200, that's kind of where I would see value to get out. So we'll go with that as the tortoise exit right now. And this is how I stay away from trades I have no business being in. I really don't want to be long below. I mean, I don't want to take longs below S2. That's the general rule. Is there an exception? Maybe with blow off volume. That means volume that would kick out like 5,000, you know, so extreme volume at a bottom. You'll see it. It only happens like 2 to 4 to 5 times a year that you see a true bottom or a true top. Maybe not even that, really. If you think about a top of a market in a year, there's only one top of a market and there's only one bottom in a year of a market. Might make a double bottom, might make a triple bottom, might stay within a certain tick level of the bottom or the top, but there's only one true top, one true bottom in a year. So usually there's only one extreme volume to 2 extreme volume periods in a year. So it's really hard. Well, when it does come on, it blows all the other volume numbers away. This is what the tape you're fighting right now too, right? You're fighting against all this. Now we got out up here, and it looks like I had a lot more on the table. I had a whole bunch more there that I could have had. At least 50. I could have had a 100 tick day. If I could have been a little bit more patient on my exit up here. But I wanted that 50 ticks. I wanted to pull out of the hole. And I was in the hole. Paid even a minute. You know, I had a bad first day of my trading, and it took me some time to get out of that hole. So that was my overall goal today: is get out of the hole and then hopefully find some decent trades from here on out. Because I had some had too many trades in one day. I forget what day it was that I kind of lost trading discipline. It was a few days ago. We're probably looking at the top of this here now. Bollinger Band. Still thinking that bounce at 3,800 though. Look at our momentum indicator right now. It's saying there's a bottom in. If you're a betting person, this is where you would put some of your line out. even if it went down a little bit lower, this momentum indicator and this is all showing that we've got a bottom right now temporarily in the market. It's very close to it. So this is what confused me would be the percent R. That's why I put on the MACD. It's a slower. Dr. Burns calls this mom part of it, and dad is the slower of the ones. I like using the dad indicator. Now let's get on 3803, went down by one tick there. See if there could be a bounce at the 50%. Now I expect that it'll push down and then come back up through it. That's what normally happens at on a 50% retracement. You see it move through it and then get support. Well, maybe today will be a different. 3801. There's some Fibonacci traders coming in right now. That's at the 50% line. They're trying to buy the 50% line. So let's look at that momentum indicator right there. The divergent setup, it looks like almost. It's kind of, it's barely a divergent setup, but it is. So that's a tough one to trade because this red line and that red line's below, so you have conflicting signals in that right there. That one's a tough one to trade. This one's showing a little bit. About 5 ticks over this level right here is where I would exit, which would be roughly 27, I'll call it 33, 31, 31, 32, 33, somewhere in that area would be my exit. So there's a 100-tick trade on the table today. This might be the last hurrah before the weekend. I won't trade at all next week. That's my week off. We'll continue to work on MACD and Williams percent R. I might take off from here until July 6th now, though, since I'm positive. I might just relish in get myself, look at the market after the fact, try to figure out my plan of attack. It's coming together. I'm liking I like the MACD addition to my charts. See, that's why that was confusing right there to me. So
I'm not a very confident short or long side trader. You know, I'll hold a 2-hour stop on a short, but I'm very aggressive on my longs because unfortunately I'm not a very good long side picker. That's the addition of the MACD is to help me to try to find bottoms a little bit better. Here's a crossover, 50 and the 100 bar crossing right here. Interesting. You see the 9's above too, so we got a crossover right in this area. Crossover of 2 lines. So for 9 EMA, our 50 bar SMA, crossing over the 100 bar SMA on a closing basis. So that's the first time that we've seen that since we went down. We use that as an exit point right there, the 200 bar. That's how I developed the tortoise and the hare strategy, by the way, because I would try to pick a bottom and then I'd get my ass handed to me. So then I started trading that second contract or second series of contracts against a stop that would keep me out of trying to pick a bottom. And then there's where the strength of the tortoise and the hare just works out for you more than in a nice move. You take the hare's, well, we obviously took the hare side of the trade up here on our exit, but the tortoise is, you pick a level and you just stick to it. Where that you say, okay, if it gets here, it's failure. Right now, I say failure is at the 200 bar line. I would have been completely satisfied to get all out at 38.11 then, by the way. When it hit 38.01 here, I would have been, well, maybe a little higher, maybe right there on that level right there. I would have been satisfied to come off on the 50 bar SMA right here at 38.01, expecting that we'd have a bounce at the 50% retracement. So that would have been a good exit on the tortoise today. And if I would have been able to hold the hare side of the trade, that would have been an excellent exit on the hare. Most likely, though, I'd have been getting out on the hare side right here. If I would have been fortunate enough to hold the move, most likely right when it hit that 100 bar line right here is where I would have exited the trade. I might have been fortunate and hold it. And if I did, I would have been exiting here. It would definitely knocked me out on the hare side around here. I would have been definitely knocked out. So I'd have been out of the trade here. That would have been, so at some point in this up move right here, I'd have been knocked out of the hare side. So the only thing that would have been involved here, if I could have held, now I'd have been extremely happy to grab 100 ticks wherever that would have been though. So I would have taken 100 ticks on the hare at any point. So that would have been a win for me no matter how I look at it. And then the only thing I'd have left basically would be using this 200 bar line as a tortoise side trade. Notice how that the lines will keep you out of bad trading decisions. And that's where one of my general rules came about, by the way. Never take a long below S2, because this is how I would turn winning days into losing days. You have another divergence setup coming in the charts right now. I mean, excuse me, it's a convergence, not a divergence. One of these is going to work out. But I definitely want to do is get a horizontal line on the charts right there on my 333 chart. There is definitely some support going on and demand right in that area, maybe a little bit higher. Right there. So look, this I put in a mid. There was that level that we were looking at before. Now we see some more. Can physically get rid of the midline right here. Didn't really react too much up here though, so you can actually get rid of this line and hold. This is what's holding right now. I expect the bottom somewhere in this area. If not, then we'll see this area right in there to be supply and demand in the future. Definitely some interest here. We traded last 20 minutes. There's a lot of interest right at this level. Makes sense. We're down here at the 50% retracement, so you got your Fibonacci traders fighting right now. Here's a nice signal there. Low to low. This low against this low against the Fibonacci number. That's a. If I was a betting man right now, that's where I'd put the bottom in for now. We got our exit right on the 200 bar line, by the way. That's the last of our resistance lines that we have on our charts right now. Say one tick above to 3 ticks above, whatever that would be. Come off on an odd number, probably 29. Let's call it 29. Let's call it 29. Looking back here, it gets up to 29. You would think the down move is done for a while. That got to 29. Yeah, definitely done. All right, put a fork in it. Oh, now it's going to come right back down. There you go, man. Look at that right there. Anomaly bar come in right there. I think that's the end of it, though. I think we're seeing the bottom right now. And this is buying pressure finally coming in the market right there. But I'm not going to take a. I don't know. Your guess is as good as mine when it comes down to bottoms. I'm not real good at it. But I did see this level right here. This is where I would have had interest coming up through here. And most likely been knocked out of it. I might held below this a little bit. But I'm going to be very skittish on long signals. we've hit this point 3 different times, so it's looking pretty significant that we've reached a level that's going to be fought at in the near future right here. Between 3,800 to 3,830 roughly. It's going to be some levels that's going to be fought at. So this is what our new demand supply area is looking like right now. We'll see how that works out in the future. We are living and learning, trying to hold a bigger stop, right? Once again, I don't like taking longs below S2. Just won't see me do it. I have to have a better signal. Now this was a good signal perhaps, but we had a whole bunch of more signals all the way through here. But finally you could feel the momentum switching right around here. I could start feeling it right around this level that the momentum was switching over. Doesn't mean it's done going down. You could just tell that the momentum was switching right here for now. Now it could go up for a little bit and then swoosh, sell into close too. But there was a big number down here at the Fibonacci 50% retracement level. Big number. Common number, whatever you want to call it. But that's, and then you see it being played out on a little bit of a slower move here on your 333 chart. And if we would take this out, let's custom, let's call it a 999 right now, and you'll see a similar thing as well. See how that played out right there? There's your demand area being played out right there. This will be, this is going to be a significant level in the future if we go under. Coming back, this will be supply. Like up here is another supply area that we fought through today, where I was exiting the damn trade and still had lots of room to head down. So it was a 100-tick trade is what I could have got. Woulda, shoulda, coulda. Well, I was in here, coming out here. I had this much more. Can't kick yourself anytime you take 50 ticks away from the market. Anywhere between 50 to 100 ticks is always a goal on your Hare side of the trade, period. So I have a slower, that's one of the developments that I started using, a slower tick chart. And what I'll do is I'll take this one between 333 and 999 on this one to slow down the market to look at it a little bit better, instead of all the cannon fodder that I'd get involved with. And then I'm trying to use MACD and Williams for confirmation here. The reason being is that Williams %R, I love Williams %R to help me make signals. It's a bounded indicator. And the bounded side of it is that 0 up here and the 100 down here. So it hit hundreds a whole bunch of times down here. Where's the bottom? I don't know. Where's the top? I don't know. A bunch of zeros. But all of a sudden with the MACD that's not bounded, you can start seeing a little bit better a temporary bottom in the market right here as you're looking at this low against this low over here. You can see that this low and this whole area right through here, there you go, there's your supply area being determined here. There's a huge amount of supply at this level right now. Doesn't mean it'll hold. There's just a huge amount of supply right now at this level. So you see that, and that's one of the things that I started noticing. and you use your higher up chart, tick chart, to define your supply and demand areas. It's where the market decides to gyrate back and forth like you're looking at right here. Sometimes it's easier to see when you go out a little bit higher, right? So 333, the 999, all of a sudden you can start seeing those supply and demand areas a little bit better. So if we would go back on this one, you start seeing supply and demand roughly in this area as well. See, I kind of played around this area for a while.